Hello, everybody. Real Estate Ninja here. Got a great story it's from Equifax Canada, and it says report reveals increased financial strain as credit delinquencies continue to rise. Check this out. Ontario and British Columbia lead rise in missed mortgage payments. Why is this important? Why are we talking about if you're from America, why would you care if something's going on in Canada? Well, first off, there's a lot of subscribers out in Canada, but America is affected by the countries around it, right? If Mexico falls into a deep recession, Canada falls into a deep recession, it can definitely affect the US. Why? Because of trade, all kinds of things, right? So it's really interesting though, because Canada is moving into a real estate correction as well as America. There are going to be many opportunities in Canada and in America for real estate deals. And watching these kind of stories are really telling of how deep we're getting into this collapse. It says, out of Toronto, this was dated yesterday. According to Equifax, Canada's latest market pulse, consumer credit trends, and insight report, economic pressure is more visible as many consumers struggle to make monthly credit payments. Delinquency rates for non-mortgage balances that are 90 plus days overdue went up from 1% in quarter four of 2022 to 1.3% in quarter four of 2023, representing a 28.9% increase. That's a big increase on percentage basis. Mortgage delinquency rates over the last 12 months saw a 52.3% increase from 0.09% to 0.14%. Now, a lot of you may think, well, that's really small, but I want you to understand things are they're growing and growing and growing. And what you want to do is you want mental slides in keeping up with the current trends of credit card delinquencies, mortgage delinquencies. As mortgage rates go up and sales fall off a cliff, what you see is you start seeing it getting worse and worse and worse. And that gives you the ability or the desire to get ready more and more and more. It says delinquency rates rising in Ontario and British Columbia. They've been particularly affected, with mortgage delinquency rates soaring by 135.2% and 62% respectively compared to quarter four of 2022, surpassing pre-pandemic levels. That's the key right there. When you see these rates going past the pre-pandemic levels, that's when you know we're in serious times, because like I said before, 2019 is when the banking industry in the US was coming apart at the seams, and the powers that be needed an answer. They needed the ability or the excuse to print money crazy, okay? So now we're seeing those levels going back to before the pandemic. Very, very important, very telling. It says financially stressed mortgage holders in these provinces are also increasingly missing payments on their credit cards. Missed payment levels in Ontario and BC are primarily being driven by younger homeowners, where both balance and account delinquency rates are now higher than 2019. And again, 2019 is when it started. Also, real quick, anybody both in Canada or America or anywhere in the world that bought the real estate crash course, the how to prepare for it, I just put a new lesson on there. It's for all the new homeowners, how to change your psychology of buying your first home, okay? So go check that out. Mortgage renewal woes. It says the effect of high interest rates on consumers renewing their mortgage continued to grow in the fourth quarter of 2023. Now, this is really important because in Canada, 30-year fixed isn't a 30-year fixed. It says post-renewal monthly mortgage payment increased by $457 on average, with higher spikes observed in Ontario and British Columbia, where this increase exceeded $680. Let me explain. In Canada, you don't get to keep your mortgage payment fixed for 30 years. You have to renew it so many years. I want to say it's 5 or 7. Please remind me down below. But the thing is that because things do change in the mortgage industry in Canada as well, but it's a much shorter time period than in America. So you can only imagine what our brothers and sisters in the North are going through right now, because they are hurting seriously because they're forced into financing at much higher rates. This is why the commercial real estate is imploding in America, because they have to refinance every 5 years. So think about the woes that homeowners are going through in Canada right now, where they are being forced to refinance at much higher rates. They just can't pick it up. And like it says here, An extra $457 or $680 more per month? That is insane. Added on top of that, the higher price for fuel, for food, for insurance, and everything that they're going through, this spells disaster for Canada. And this is why you need to get ready for this, because if you're hurting in Canada, trust me, everyone else is, and that's going to squeeze people out of the housing market, and it's going to cause an implosion. So do you want to be ready to buy, or do you want to be a part of the problem? Now, they say here, a quote from Rebecca Oakes, Vice President of Advanced Analytics at Equifax Canada. As we assess the unfolding dynamics in the housing market, it's evident that upcoming mortgage renewals will be pivotal for many homeowners. With the prospect of renewing mortgages at substantially higher rates than current ones, consumers who locked in historically low rates in 2020, particularly those with substantial loan amounts, may face challenges in sustaining their payments. They say in quarter four of 2023, total consumer debt hit $2.45 trillion, which was up 3.2% from the previous year. Non-mortgage debt rose by 4.1%, mainly fueled by a $15.9 billion rise in credit card debt during 2023 to $116.2 billion. The holiday period saw seasonal increases in credit card spending. However, when adjusted for inflation, the number suggests a slight drop compared to 12 months ago. It's because people are spending less because they have less money. Inflation levels are starting to fall across Canada, but sustained high consumer, you know what, let me just ask real quick. Anyone from Canada, hashtag Canada and put if prices are actually going down. I do not think they're going down. I think the government's lying. I think Trudeau needs to be kicked out of that country, sent back to France or wherever he came from with his other political cronies. And I think that they're straight up lying. It's absolutely disgusting. And it breaks my heart for people in Canada that are amazing people. I have so many subscribers there, and they're going through a lot of crap. But it says here that Canada sustained, they say inflation levels are starting to fall across Canada, but sustained high consumer goods prices combined with rising monthly credit card payments mean that some will likely be pulling back on discretionary spending. Credit card balances that were being driven by a rise in consumer spending are now being driven by reduced payment levels instead. Fewer consumers paid off their credit card balances in full, dropping from 66.1% in quarter four of 2022 to 65% in quarter four of 2023. This trend was more notable among those with variable rate HELOC balances over $50,000, falling from 64.1% to 60.8% year over year. Additionally, the average payment per dollar spent declined, suggesting financial strain, especially among those under age 25 who on average pay 95 cents per each dollar spent. Look, Canada's falling into a recession. I believe it's going to be a depression just like America, and you need to get ready. Start preparing now so that you can crush it during this next wave. Don't let the bankers win. Hope you have a great day. The Real Estate Ninja is out.